Good morning, everyone. Microphone check. Screen check. All right, there we go. Welcome, welcome, welcome. A little bit of a weird fluke going on with my microphone there, but I think we're good now. All right. Right? Yeah, okay, good. Sorry, just double, triple checking. I don't like having weirdness at the morning, you know? Anyway, welcome, welcome. Hopefully you all had a fantastic weekend. Hopefully you're able to rest up and get ready for the week ahead and all that fun stuff. Good morning, good morning. Hey, Steve, Vladislav, welcome. Everybody else so far, welcome. Hopefully you're all well rested and you've had a great weekend. Before we jump on in, of course, on the right side of the screen, like always, make sure to read through the live trade room morning prep PDF. Very important to go through and understand everything that's inside there. Hey, Zach, how's it going? Just a quick note for you all before we jump on in. Please keep in mind that the YouTube broadcast does have between a 5 and 30-second delay, depending on where you're logging in from, which will definitely impact the timeliness of what I may be talking about. Also, just want to take a second, since we're after the weekend and all that, we've had a few days in between there. Just want to take a second to give a shout out to the latest members that joined over the weekend and this morning and all that fun stuff. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. Here on YouTube, you can check out the join button below the stream. YouTube family gains access to the extended trading hours room, which continues from the morning session, and that goes until we end the morning around 10:30, 11 o'clock. Every morning, jeez, oh Pete. Hang on. Every member gains access to the Discord chat server. And of course, you get the awesome badge next to your name to show support here on YouTube. To understand the trading approach and what it is that we are doing every day in the room, look no further than the Day Trading Academy. You can find that over on SSFTG. Now, listen, this isn't a small PDF guide you're going to be able to go through over the course of a weekend, okay? You're looking at about 19 plus hours of course and study material, including homework, review, lots of stuff. So you best tuck in if you're going to be going that route, because there's a lot there. And then finally, the Big Kahuna, the Mac Daddy, the VIP. Did I say that good enough? The VIP. VIPs have exclusive permanent access to the non-delayed stream covering the entire morning session. That way you can ensure you're on the fastest connection possible so you don't miss any beats along the way. Of course, alongside that, VIPs also have access to the monthly webinars. There's one coming up, was it next weekend? Or maybe it's the weekend after, I don't remember. It's coming up around the corner. That one's going to be really cool. I'm kind of excited about that one. Anyway, before I go down that rabbit hole, VIPs also have access to those monthly webinars like we were talking about, private one-on-one scheduling access, private events, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside with me this morning, analyzing these crazy markets of ours and all that fun stuff. Sorry if it seems like I'm distracted. I am. My cat's driving me freaking nuts this morning. I'm kind of glad the webcam doesn't work. I don't know what happened. We don't have any catnip, but oh man, I don't know what he's doing with this stuff. Jeez, oh Pete. No lucky draw over the weekend. No, what I did do though is I went through and I was able to record an entire week's worth of videos. So with that out of the way, that will open up a little bit of extra time to do fun stuff like that. So fingers crossed, that'll be the goal. Anyway, so looking at the don't forget to grab your morning DP levels. Those are all there for you on the big 7: Nasdaq, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. Looking at the news today, we really don't have any. I guess. I mean, there's some minor stuff. FOMC member Williams speaking at 9:30. Now, if you're on the agricultural side of things, totally different ballgame. Way different ballgame. The agricultural side of things has a WASDE report. That is no joke. If you're trading WASDE, if you're an agricultural trader, this thing, you know, a month ahead when this thing is coming out. This will shake the agricultural world around a little bit. It's very similar to non-farms in the U.S. equities, that type of thing. So the WASDE, if you are an agricultural trader, that's coming out today at noon. Be careful. Aside from that, let's take a look, starting off with the S&P and working our way in. Obviously, from this perspective, we can see that the market did finally rotate its way back up. And really, the big thing that you kind of want to see here is how are they rotating back to the upside from this? Because obviously, we had this gigantic V bottom. And there was no confusion, right? It's not like we had an L3 or an L4 or even a 5. I don't know, I barely even had a 1. So with that kind of momentum, you know, when are they actually going to pull back? Because really, can we consider this a pullback at this point? So what a lot of traders are waiting for is that one bigger pullback. And usually that's one step down from what it's been doing. So if we're following along with this is an L1, L1, all the way up, L1s, 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 even on the big pullbacks, L1s. So eventually, when the market finally gets the pullback, it's going to want to go to where? L2. Well, guess what they finally got on that pullback? Not to mention that was also the previous POC and the wedge bottom and a bajillion other things. But major zone of interest, and a lot of buyers were not shy about buying there and had that thing screaming all the way back to the upside. But it wasn't without at least some contest from the sellers. They did at least give it a shot here. Now, if we look at that, kind of seeing, you know, well, what happened? If we're going from the top to the bottom, what could be the... Oh, that's great. Cool. My data doesn't work. Let me go all the way forward then. I guess I won't be able to see the impulse. I was hoping to see the impulse because it was likely going to be down here, but it looks like visually it would have been here on the impulse leg down. Either way, they shifted the POC back to the upside. So if there is any type of pullback of any substance, it doesn't have to be today. In fact, it probably won't be today. But if it is, you know, that would be a logical point of interest to retest the bullish entry, assuming that these are longs and that would be their average. They've got some pretty good movement to the upside. Would they really want to re-up into this? And that's where you have to look at it like, well, wait, are they at a 2-to-1 target? Not yet. That's good information. That means that if it does pull back, they have every reason in the world to re-up into the position because it hasn't made it to the finalized objective. And as we know, swing traders they're totally fine letting it come back once or twice. That's fine. Just as long as it doesn't start doing it 3 or 4 times, then we've got some issues. So that's the important thing that we're kind of waiting to see here. And with this kind of momentum to the upside, they might just finish the objective all in one shot without even pulling back. But if they do pull back without finishing that, that would be a big zone of interest for them to reload in. Now, realistically, if we use a little bit of common sense and see if the traders wanted to get their entry with a target ahead of the highs, then it would have made a lot more sense. They can do worse than that. There we go. At the worst, their entry would have been at around 43.0350. So, I mean, here's the thing, right? When you see responsiveness like that at around those areas, it kind of makes you think, well, buyers might be trying to take over a little bit here, but either way, aside from that, we have a nice rotation back up. A lot of traders will have hit their 2-to-1 targets already. We had a very, very high settlement close going into the weekend, and now we're going to be opening maybe gap down, maybe gap up. There's going to be a bit of a fight over the next 20 minutes or so to try to see where they can get this thing to land. Looking over at gold, I guess. Oh, man. Gold is... I don't know. A mess, a train wreck. I mean, the thing with gold that we've got going on right now is the 15-minute chart looks absolutely abhorrent, right? It's just absolutely terrible. If we zoom out to like a 60-minute chart, we can get a bit more clarity as far as what's going on, right? It looks like we had looks like is pretty obvious. We had a gigantic dive to the downside, and with that really strong breakdown, a lot of sellers are going to be looking at, well, okay, if they broke down, what did they break down through? What if we come back to that? Did they respond? Well, they did. But, you know, all of that said, is that going to be the one and only thing that's going on? And I think we really have to go back and look at what's taking place on volume. From the top to the bottom, one of the biggest things that we saw from the euro to gold, if you remember, the euro had that top-weighted POC way up at the highs, and it just wouldn't shift lower. Whereas gold is trying to get that move, and they did have that POC shift down. Let me change it to minutes so it loads faster here. And we've got that POC shift to the downside all the way down just to the impulse. So noting that, you know, that's what's going on, the bulls have a really strong desire to want to go and keep this thing going back up. And where is the likely objective? Back to where the POC was, back up into the 1900s. I mean, the way that it stands, though, we've been having higher lows the whole way up. So it's going to make it a little bit awkward because a lot of traders are going to want to buy a dip that's just not happening. So if we do get a dip, it's likely going to be fairly short-lived, and we might not even make it to that POC. A lot of traders are going to be looking for that more aggressive continuation back up because they know this is a big wide open window. When the market starts piercing into here, there's not really much to stop it. It tends to cut through there pretty quick. And, well, I mean, from this perspective, you can kind of see this is a beautiful, beautiful consolidation for maybe another leg back to the upside. It could easily spill back down, but I think it'd be safer to wait for a retest if that were the case. Just because of that POC down there. So gold's looking all right. It's just the 15-minute chart is a bit difficult. This is much more of a range. Knowing the bigger perspective is bullish, I would rather buy the lows of a range. Again, buying a dip, assuming that it's going to be a failure, makes a lot of sense. We'll see if that dip wants to show up. Over on crude oil, here again, you know, it's another market that it's just, it is kind of looking good, but it's kind of not. You know, we've got this beautiful ABCD leg to the downside, and it's almost perfect. If we look at from the top to the bottom, right there, I slightly mismeasured it. You can see I missed it at the top, but it's basically perfect. You know, you can't get a better ABCD correction than that unless that was like a 1-to-1-to-1 and it just looked like a big old, you know, one of these. That would be the only thing that would be better than this. It's just perfect. And a lot of buyers obviously bought into that dip, seeing that same thing. Now, the concern that we were talking about at the time is how separated these three bases were. And a lot of times the market will like to create those three bases that are a bit more obvious. Well, now that we're breaking above that swing, that is now proving that that's probably not going to happen. So we have to approach this with a bit more of a realistic perspective and say, well, if that's not going to happen, then what's the next likely outcome? The next likely outcome then would be looking at, well, where could this next pullback go? If we're looking at the near cycle, really, really, really close, we can see from the bottom, we've got this first wave to the upside, beautiful break above the highs, and then the final continuation, which is almost another 1-to-1 move back up. So as far as continuation goes, where are we likely going to see support come in with this type of structure? Back into the previous third to fourth wave, or back inside the previous area where we saw support down here. We're right in that first zone, right? This looks really aggressively bearish, but you can definitely beg the case of the bulls demonstrating maybe a double bounce, and all of a sudden, it's not looking so bearish anymore. This could very easily be a break-even pullback, and that's where we can implement volume and kind of see, well, on this impulse leg to the upside, where's the POC? That's concerning. Holy crap, the POC is way up at the top. Okay, well, that's going to make it significantly more difficult for the buyers. This spill to the downside, they basically need this to be a V-bottom right now. That takes away, seeing the POC up here, takes away a lot of the probability of the bulls. I was trying to build a bullish case here, but that makes it incredibly more difficult. This could be gearing up for another spill back to the downside with that POC shift. That's nasty. Let's look back at that last ABCD leg to the downside. Where did they land? In the middle? Of course, data's bugged. Why wouldn't it be? Let me go forward a little bit. Oh, NinjaTrader, your data sometimes just drives me freaking crazy. You've got the volume right in the middle, and I don't know if that's the impulse. I would assume it is. So we're finding some balance on that inside continuation. If this is longs taking over again, this is where it has to take off. So this creates a nice swing potential, right? Low probability, but very high reward. Very nice location for that type of scenario to be taking place. Not high probability, though. Over on the euro, also a complete train wreck, but we can see they were trying to get that POC shift to the downside, and if we drag that from the top to the bottom, we can see, and I know as soon as I go in there to try to change it, it's gonna flick up, so I'm just gonna leave it. They still, really? Man, they still haven't shifted the POC. Golly, 22,135. that is still way up at the top. Buyers have no hope until that's completed. The assumption here is that these are sellers who are either, these are sellers who are correct and in deep profit territory. If we look at the risk reward for them, assuming that their actual risk was above the highs, the sellers are on, I'm going to guess a 4-to-1. Oh, nope. 5-to-1. Yeah, 5-to-1. And that's where we're finding support of, mind you. That 5-to-1 of the seller's POC is the exact bottom. I don't believe in coincidences when it comes to markets. Nope. I think a lot of profit taking took place at that 5-to-1. Again, you know, building the case of maybe this being a reversal, maybe, but we haven't seen the POC shift to the downside, which would still suggest that these sellers are still short for the most part. Until we see that POC shift to the downside, the assumption would be then that they're still short and they're looking for more lower movement. So although we do have a 5-to-1 bottom, and very likely that's the cause for that bottom, that might not necessarily be the bottom of this move. We'll see. One other consideration that we could take into account, we did have this lower high. It could be looking for a breakdown and maybe the good old fib 618, which would be just a bit further down, 17435. I mean, geez, this thing's crazy. I would probably put it like this, which is still right basically underneath the lows. I just don't see this continuing down much further, really, is what I'm getting at. But, you know, hey, we haven't seen the POC shift, so we got to give them some time. Over on Bitcoin, getting slapped a little bit off the highs, but really, if we take a little bit of context into play here, it hasn't gone anywhere. It's still stuck inside the previous highs, previous lows. The one thing that we were looking at for the bulls case was an inside trap, which they do have. We had a very nice trap outside of that. This pullback, if that is the bullish case, should see support around 33 to 32, 700s, 600s. It shouldn't break underneath this again. And if it does, it should only be a momentary lapse in judgment before it pops its way back up. If it starts working its way back down to potential new lows, although there is likely another type of trade down there with a wedge low buy, obviously, that would be an invalidation of traders trying to buy the dip down here. That would be a new low. The only other case that they may have, and this would likely take a higher probability stance, would be buying underneath the lows with a stop underneath the major low. It would make a lot more sense from that perspective to be more on the scalp side, unless you're just a BTFD hodl, let the thing go. So Ethereum finding a really nice balance down here. I mean, one could definitely argue the case for a bear flag and a continuation lower. There's absolutely no denying that. And it would make a lot of sense. You know, we've been talking about deeper prices for a while to get that real big washout blood in the streets. And I still don't think we've had that until we get Bitcoin to 20,000. But, you know, as it stands, this is a great little breakout pattern to try to get it going. But if the sellers fail, they've got some serious problems, because then the rotation back up to the highs, everybody's stuck if they were trying to short it. Or FOMO takes over and everyone wants to buy it. Either way, everyone's doing the same thing. And I see the questions. I just wanted to make it through the morning thing here before we go too crazy. I think we have a sell-off because we had a rumor on the weekend that Apple is going to buy 2.5 billion on Bitcoin. Oh, for sure. Yeah. I mean, let's be logical here, right? If a company, assuming, you know, a company like Apple knows what they're doing, I would make that assumption. I think that's fair. They're not going to drop $2.5 billion on Bitcoin in one shot, and chances are they're probably 80% in already, right? So I just buy the rumor, sell the news, you know? Or I guess sell the news, buy the rumor in Bitcoin's case, whatever. What are your thoughts on micro crude? Really, what it comes down to is the vol. This is kind of like Judgment Day, right? In terms of micro crude, it's its first day in the rodeo. We'll have to give it some time. I don't want to make any quick snap judgments, because it wouldn't be fair. You know, I think we're going to have to get a solid week or two, or potentially even a month or two in before anything becomes of real interest to the upside. I'm sorry. I looked at the L1 from earlier that we were talking about in the chat, and upside just came out of my mouth. But if we look at the MCL so far, oh my God, what is get off of my mouse. Thank you, alarm clock. MCL. When I pulled it up last night, yeah, I was gonna say it wasn't looking so great, but you know, I gotta be honest, it's looking all right. To be full disclosure, I'm not gonna be trading it within the first month. I just don't see, not necessarily a reason not to, and it's just one of those things where I want to feel the market out first. You know, it's like an IPO. Everybody's always hyped up on the first day. But what happens on day 2, day 3, you know, so on. I mean, it's looking okay, but I think to be fair, we need to give it more time. And that's really what it's going to come down to. I hope it does really well. I would love to add the MCL, the micro crude to the repertoire, and be able to shift everything to micro would be incredible. It would absolutely love it. But that said, it's got some proven to do, if that makes sense. Is it possible if the small dip on the ES is profit taking? That's one scenario that could definitely be taking place. If we look at hang on, let me swap this over to the ES. Every time I can't get that little video out of my head. Ugh. It lives rent-free in my brain. This little dip that we've got going on here, we can look at the POC in two different forms. If we're looking at it from the top to bottom, well, first off, if I were a buyer, then I would have to assume that the bulls would be long in this. If we're looking at the POC from the case that they, you know, those are the winners, if you will. So if we want to go down from top to bottom, fantastic. The assumption would be that the longs won, and this would be their average for the long. The other way to think about it would be shorts were trying to get it to go short, and they were wrong, and this is where they're stuck from. Either way, right, this is the shift in power. This is where everything tilted. This is the balance shift. The sellers lost their grip, and we can see this in hindsight, right? This isn't something like, oh yeah, at the time you would have totally known this. No, you might have been aware of it by here or maybe here, right? But I mean, let's be realistic here. Right there, you'd be taking a little bit of a risk. It's a nice close above it. But be careful when looking in hindsight. You got to be realistic here. Nice shift to the upside with more continuation. Now that it's broken a new high, this is a confirmed POC, and we can confirm it by going just a little bit ahead of the break. And the POC lands right there at 43.10 on the S&P. So at 43.10, the assumption then would be that those were the buyers, and they won. I know they won. It went up. Congrats. Yay. Woo. Golf clap. But what kind of traders were they? If their average was way up here, this doesn't feel like it's a great average. You know, it's not like way down here. So if we drag this all the way to the bottom, what kind of traders are these? Well, a 1/2 to 1, obviously, the scalpers got plenty of room. If they're going 1 to 1, they still have room. But notice, once we start creeping this out into 1 to 1, all of a sudden now, we see a bulge in volume. Well, that's interesting because you'll notice the market didn't spend a whole lot of time there on either side. So there's a lot of interest going on there. And when the market starts creeping its way back up, what about a 1.5? Can they squeak a 1.5 just above the top? And look at the response, 1.5 to 1. There's a response. What do you want to bet? 2 to 1 is going to be the next major zone that if this does poke its head above the highs, we are going to find responsiveness. That would mean then that yes, this is likely profit taking. How could we further confirm this from this scenario? If these are the longs, then until the POC changes, they haven't exited, right? That would be the commonsensical answer. So if we drag this further forward and we look at what are they doing, we have a POC shift. Crap, right? Wait a minute. If the longs are long and they're long until it shifts because that's when they exited, we've got some problems. Now that the longs might not be long anymore. They might have exited a portion of their position. It doesn't mean that it can't go further up. We see these mid-weighted POCs all the time. And if that's the case, then boy, howdy, we've got a heck of a move on our hands that's just waiting to happen up to that POC. Ooh. But, you know, right now, this is a bit of a concern, especially seeing some responsiveness off of that. That's tough. Maybe it was profit taking, but seeing the POC shift up here, if they start responding and we continue to break down a little bit further, add a little bit more proof, that's not going to give me the warm fuzzies, you know? That's a tough one. Especially noting that response that they had at 1.5 to 1. That further increases the likelihood that the 2 to 1 is potentially going to be the high of day. If it makes it up there. So it's going to feel super, super awkward, but low probability out of the monies, you know, options, puts, etc. to the downside are going to be looking for the top to fail because the assumption is everybody's going to be taking profit there. Now, if it blasts off through there, then we've already talked about, we've got that middle weighted POC and a monster of a projected move. Should be interesting. Anyway. Looking at the daily chart, we finally had one pullback. That's it. It was a value pullback. Whoa, what a surprise. Who would have ever thought? 2.31%. Then the last one was 2.3, 2.26, 1.7. Oh, man, would have never guessed. Really nice move to the upside. No such luck on the double value pullback. Just another L1 and just another continuation. I don't even know if they hit L1. I mean, yeah, that was that little snapback. So L1, we continue. Keeps on going on and on and on and on and on and on until it won't. But for now, the bulls are keeping it going. We already know the upside objective is likely going to be back to the highs to complete the 2 to 1. If we look at the NASDAQ on the 60-minute chart, there really isn't a whole lot of change, but let's drag this further forward, see if anything is updated. Get rid of these old ones. Those are obviously out of the way. Thank you. So their POC still stuck way back there at 13,649.50. We're almost up to 15,000. I mean, you can feel the pressure up here. It's like almost an impossibility that we don't poke our heads back up in the at the 9:30 open. As far as the move this morning goes, you'll notice that we had an entry. This is one that we were talking about in the Discord room. For those of you, that was the L1 reconviction area that we were talking about. Worked out fantastically. This was the end result. I tried so hard to let the thing go. And I'll talk about it in a second here. We've got the open right around the corner in about 3.5 minutes. It poked its head above the highs, right? And I'm like, okay. I'm gonna let it go. It's a beautiful L1 reconviction. It's looking fantastic, right? And then if you'll notice, you zoom in on the time scale here. I was like, yeah, no big deal. It's pulling back 5 o'clock, 5:30, whatever, not a big deal. 5 o'clock, 6 o'clock. I'm like, all right, I got a little bit of time. I'm gonna take a little bit of a rest. I'm gonna go for a small little walk, grab a drink, whatever. And I swear to God, I came back and the thing tanked all the way down. I was like, what? Excuse me? So as soon as it popped back up, I took the exit. In hindsight, that was a stupid move. It was a very emotional response. I was just, like I said, I left and I came back and everything was gone. I'm like, whoa, wait a minute, what? So I quickly jumped out of that one. It happened incredibly fast, though. It was like a 15-minute time span and just gone. So there's nothing I could really do about it, but it followed it perfectly. It was a fantastic setup. C'est la vie. What do you do? But just so we're on the same page as to why I'm not still long, that definitely shook me out. Rotten bugger. 1 minute until the open. Now, as far as an ABCD continuation back to the upside goes for objectives, if we're looking at that from there, we've got a little over a 1-to-1 move higher. Open right around the corner. Let's see what they want to do. The thing that would make the most sense, although the open rarely ever makes sense, if we look at this rotation back up, we had an L3, which is usually based on confusion. If the following breakout is on aggression, the next one's usually going to be an L1, L2 continuation pullback. A lot more likely on the L1. But again, we're at the open. So, shot in the dark. There's the L1 to the tick. Micro double bottom off of that. If we're looking at the volume on the continuation down, we can definitely see that the sellers lost their grip at 816 and then rotated back up. Beautiful pullback back to that area. That impulse led up with another POC right back at the same spot. Really? It was a double POC. Interesting. And look at the volume that came in up here. Yikes. Hindsight's a pain, isn't it? Oof. Awesome. Have a good one. Enjoy. L1 continues. So, I mean, even in the open, they're still following the rules. They're doing what they should be doing. If we continue this volume back to the upside, all the way to the new highs, we've still got that POC way back out there in the middle of no man's land. No POC, just kidding. POC shift to the upside. Wow, right when I was saying it, huh? That could be sellers realizing they're stuck with this continuation, knowing that we're above the POC for another breakout above the top. Yep. We could be off to the races for a little bit more of a continuation back up. Upside objectives next going to be the 14,920s. And then we're going to be right around the corner to 15K again. It's right there. Can almost taste it. Dipping back to the POC, 14,875 is going to be the zone where a lot of traders are, if they were trying to short it, are going to be, well, they're going to be looking to jump ship. Now, if we just slice through this, that's also a pretty big clue. Okay. Well, there you go. Jumping back up, retesting the POC from the bottom edge. More selling pressure coming in. Very strong bearishness now. Bulls are standing on the edge of a cliff. There is not a whole lot to hold them up if they start losing ground underneath this. Another nice pop back up to retest the POC. Missed it, even. Little micro double top. Notice where we're coming back to. We're back down to that L1. We're just in the lower portion of it now. Still defending it, though. This is kind of the last ditch. If they start losing ground here, then we might be in for a nice little pullback. 5 minutes in 10 seconds here, right around the corner. Let's zoom in a little closer here so I can grab the candle. First 5. There we go. I was gonna say I knew something wasn't right. Oh God, this is why. Did you catch that? This is why. Yeah. 14, 8, 70, 75. There we go. That's the POC. Yeah. I don't care if it's not on that one. That one's fine. Let's get the price. And then back to that one. All right. Man, they're still barely holding on, huh? Hold the line! Hold it! Problem is, if they lose it. That's a heck of a bear bar. Wow, right at the bottom, too. Putting on the heat. Looking at the S&P, also a pretty wide-ranged bear body here. If we're looking at the POC from the open, we've got 43.57. Wait, why is it way up there? Hang on, that's not right. Okay, yeah, there we go. Quickly poked its head underneath the bottom of the L1. Did they hit the L2? Nope. Technically, the L1's still valid. Eesh. By the skin of their teeth right now. Yikes. Sellers with attempted reconviction to the downside, but they're fighting over this previous area. It's right at the bottom of that L1. Pretty aggressive descending wedge working its way lower here. Still having a little bit of a hard time. There we go. Now the deeper pullback is to the tick off of the L2. So, I mean, really, Ziggy? The L1 trend, if they are going to pull back a little bit lower, it usually is going to dip to that L2. That's where we find support off of. Dude. Pretty big zone of interest, but that does also mean that the L1 buyers who are trying to get that earlier pickup, they're underwater. That's going to put them in a little bit of an awkward spot. Two giant chunks of volume here, 14,840 and 45 underneath us. Jeez. Dive. Even on the impulse, the POC was up at the top. We are holding support off of that big chunk of volume down there, though. And now the POC shifted. So, you know, again, this, if you're looking at this from the perspective of what we were talking about earlier with the bulls being in and hitting those targets to the upside, If they were buying in, we saw them take their targets off at the highs with a shift in the POC. Now that we're pulling back, we see another POC shift. And what's the market doing? Well, it's pulling back. If it's pulling back and the volume is increasing, my first assumption then is that they're buyers buying into the lows. Could be sellers taking profit. Could be buyers that are looking to position up. Either way, we're seeing buying volume coming in, or at least that would be the case for right now. Now, with the assumption that the POC is always the winning side, looking at it from the opposite of what I normally do, then the next question would be, well, wait a minute. If we're under that right now and the POC is shifting down, are these shorts? And they're just decimating the market. Something to consider as well if we start holding that 845 as another retest. S&P is back to the POC as well, around 43.57. Nice continuation to the downside. More bearish continuation to the downside underneath the POC. Big pullback area. If this is going to be a V bottom, it's likely going to plot some pretty big bull bars here. If that's the case. If we drive this back to there and then assume that this next pullback is currently building. We haven't seen the POC shift down. We haven't seen any proof from that perspective yet. From the bigger picture, we're back into, wow, they missed the L4. Whoa, okay. We've got a string of bull bars. Look at this thing. Jeez. In and of itself, kind of one of its, a little spike in channel. Hey, how's it going? Welcome, welcome. 43.57 POC on the S&P continues to hold. Currently on the NASDAQ, we're under at 860. Looking across the board here, nothing else really jumping out. Kind of curious if we combine the entirety. Let me delete that one. Bring this whole thing back. Where's that POC? That's still up at the top. Wow. Savagely sold into that thing. Jeez. More continuation to the upside. Bulls will be looking for follow through now because we are starting to shape up for a V bottom. Jeez. Jack the Ripper thing's just coming through here. Holy crap. Well, it didn't stick around there for very long. Job done, I guess. Beautiful little dip for buyers to come back in on for the continuation back up. And there's a continuation back up. Beautiful. Now, I only grabbed one on that one, but there is a potential continuation up to 14,860 if you were able to grab more. I was not able to. Nice continuation back above that middle volume. Objective for the bulls next, 14,860s. Oh, man, and that S&P bull bar, that allows potential swing longs. That allows potential swing longs to go in for a continuation back to the upside. It's more of the low probability scenario because honestly, bulls would likely rather get filled back down by the 57s. It's just with this gigantic wick on the bottom and that trap reversal all the way back up, oh man, they might not be able to. The next likely area that would make sense would be right here inside that little gap closure. That's what I'm going to look for. 59.25. I think is just a much more logical point of interest. Yep. So 59.25 on the S&P for 60.25, potentially higher than that as well. But that would be the likely area where if the buyers are going to buy and buy for continuation, they would rather buy the dip. That would be the dip. Target filled. Thanks, S&P. More continuation. Sellers trying to get the breakdown, but again, we know the dip buyers on the S&P picked that one up. That was pretty straightforward. Bulls on the NASDAQ, man, that V bottom is looking a bit shaky now. Like, wait a minute. What? V bottom? Maybe. What? V bottoms aren't supposed to look like that. V bottom's supposed to go up to the highs. We're running into some issues. See if we can get a bit more info. Really, I feel is like kind of what we're waiting for here. Kind of feels like this was still a bit of a POC or a break-even run back, but Now the S&P for the bulls perspective looks fantastic. That looks great. The NASDAQ's just a little bit behind on that. Could use a bit more info, a bit more proof. We have an L1 reconviction that worked out beautifully to the upside. If they're looking to continue that momentum to the highs, then the next pullback would likely be an L1, which we already came off of. I don't know. I mean, I think a 2-to-1 would be back up basically to the highs. Scalpers got their targets. 1-to-1s got theirs. 2-to-1s are the only ones that are left. That would be back up to the top. A little bit tough on the entry point, though, huh? Well, it's there. Otherwise, if we can get a little bit of a pullback where things get interesting, L2. Ooh, L2. Man, that would be just nuts. Well, we'll see, but bull engulfing candle off the lows. All right. Kind of want to see what happens with the trigger above this bull bar. Like, okay, well, they got that giant bull engulfing candle, but what do they do with it? Uh-oh. Uh-oh. That's not good. If bulls bought the engulfing candle, they're not feeling so great right now. Sellers might have been under that bear bar as well. We've got both sides in right now, at least from the scalper's perspective. The longs buying above the engulfing bar and the sellers selling below the bear bar. The sellers make more sense right now, but yeah, okay, there we go. So now the bulls are taken out. Like, what? Oh, man. I thought they were going to break the low. They didn't, huh? They jumped right back up. 14.824 is the last, literally the last stop, where a lot of stops will be from a sucker stop perspective. The last confirmed swing would be underneath settlement. Why do you call that a sucker stop? I call that a sucker stop because it's a non-confirmed swing that people will put their stops underneath, which is a terrible idea, generally speaking. I've got a video actually coming out this week going over confirmed swings, so fear not. But essentially, what a lot of times what will happen is the confirmed swings, if you look inside of those swings, can naturally be subdivided. Right. So inside of those confirmed swings, you'll actually have a lot of other little micro ones. Well, what ends up happening is a lot of traders don't necessarily want to give everything back. So instead of putting their stop underneath the actual swing that they're supposed to down here, the confirmed swing, they put their stop underneath one of these. These are what I call sucker stops. Because a lot of stops will be under here, but more often than not, JP, Goldman, and the crowd that are looking to gobble those things up like they're going out of style, assuming context, of course, is bullish, that's where they do it, right? It's like, yeah, sure, I'll take them. Not a problem. Hand them over. Now, there will be, again, context, which plays a big role in what could be deemed a sucker stop. But from a swing trader's perspective, if I were looking to buy on this dip, why would I put my stop underneath that low? That would be the dumbest spot I could ever put. The next spot would be underneath the confirmed swing, right? So I have to base my strategy on the confirmed swing. That's the only one where math is in my favor. Anything other than that, I'm just begging to get stopped out. Doesn't mean that this one's going to win this time around. Again, I'm not taking context into account, but that's what I mean by those. From a swing trader's perspective, I do think that's a sucker stop. But we've been talking about the swing down here for a while, so I don't think that's much of a surprise. From the scalper's perspective, though, tough to say. I think we need a bit more proof. Got the POC that we're kind of underneath. If it starts popping its way back above that, though, I think realistically a lot of sellers are going to realize what's going on. They need to hold it underneath that. Hey, just a side note, because I'm cheap. It's in my blood. I can't help it. For you monster drinkers out there, I was at Dollar Tree getting some shipping supplies, and they had the Monster Hydros there for $1. Just throwing it out there, you know, if you buy those en masse. They're normally like $2.50 in the gas station, $3. They're $1 at Dollar Tree. That's freaking crazy. Yes, please. How many cases do you have in back? There's your hot deal for the day. Quick little trap on the inside. So here, this is a fantastic example of a sucker stop. Fantastic example of a sucker stop. Right here, confirmed swing. Where's the confirmed swing? There. Where do you think a lot of traders put their stops up? Right there. What do you think Goldman did? Like, oh, yes, please. Yummy. Gobble them up like they were going out of style. It's a perfect example of a sucker stop, more on the scalper's perspective. Obviously to the downside for that one, but great example of it. You just have to be really, really following the context, because if you're wrong trying to pick up on a sucker stop, the trapped, or the trapper becomes the trapped pretty quickly. Yeah, Monster is like Red Bull. Yep. Monster and Red Bull are kind of like the two big names here in the US. Red Bull, I still think I still think Red Bull has more exposure. I don't know. I guess it depends. Red Bull does like the extreme sports stuff. Monster does like dirt bike and stuff, you know, like it's just different horses for courses, I guess. I don't know. Sellers still trying to get this to go back to the downside, although the confirmed swing has not been broken. The two most disgusting liquids ever invented. Oh, for sure. I mean, if you're looking for a surefire way to die, it's probably around the realm of drinking one of those. They are not good. They're not good for you by any stretch of the imagination. That's why they say you got to be. I think you got to be 18, at least here in Michigan, to buy them. Well, maybe not these. The heavier caffeine ones you do. Yeah, exactly. Red Bull dropped their they dropped their people off the stratosphere. Sellers attempting to get continuation back to the downside. Not really. I mean, what do we do? Short directly into the gap fill? Like that just seems like a really terrible idea. I can't really go long because the POC's above, so we're just kind of stuck in limbo right now as far as the Nasdaq goes. S&P is still looking good for continuation back to the upside, and realistically, bulls are still in control. If we drag the POC further forward, we may have seen some of the buyers who were buying on that first POC. Remember, the first 5-minute POC was down at 43.57. We may be seeing some of them exiting partials at least at 43.61. If we continue this a little bit further forward, we see it then up to 61.75, and then we continued a little bit further forward, and we're still hovering around those 61.75s. So a lot of buyers who bought the dip this morning are beginning to exit. We're seeing volume increasing while prices going up. Logically speaking, that would be selling. Doesn't mean that they weren't long first, but still, we're seeing volume increasing while it's going up, so much so that we've actually taken the POC away from the first 5, from 57 up to here. And if we look at the way that lines up, if we were to just say that their average was 57 with a stop underneath the lows, just out of curiosity, what if we put a 2-to-1? That's weird. It's the 2-to-1 right on top of where the POC. Whoa, man, that's what a coincidence. Come on, S&P, you make it too obvious, man. Jeez. So obvious. Ridiculous. So the buyers bought the dip. They took their target at 2-to-1. What a shock. We can see what's happening. It's spelled out, literally. The next objective for them then would be 3-to-1. So again, looking at it from that perspective to the downside, if they were looking for a 3-to-1 next, that would be, oh great, one tick above the highs. That's awesome. I'm sure that's going to go really well up there. After that would be 4-to-1, and then the ever ubiquitous 5-to-1, which is usually, if it ever makes it there, where the market puts a cork in it, and that's going to be up at around the 43.68 quarter. Can't believe they put the POC right on the 2-to-1 target with a 1-tick front run, like for real. POC shifting down a little bit on the NASDAQ at 14,830. We've got 10 o'clock right around the corner here, so feel free to get those first morning questions in. We'll get those covered for you. I still think swings have a case, and the lower down to this previous confirmed swing, the better. Traders will buy 1, 2, 3, 4, 5 ticks ahead of it. As long as it doesn't break underneath the lows, it's fine. As soon as that breaks, though, game over. Then they're going to be looking to flip-flop. I mean, we've already kind of seen that a few times here with the POC shift down, shift down, shift down. I mean, if these are longs and they're averaging in, we're probably going to see them exit in the 45s, right? 45s, 46s. I mean, just look at the averages. It looks like it's your typical 3-to-1, which would put their average right about in the middle. But this is the bull shot once they get above the POC at least. We are going into 10 o'clock, so that is going to make things a little bit awkward. If we drag this further forward, what does that look like? L4? Yep. Picture perfect. Well, almost. That POC still kind of a pain, huh? Confirmed swing still holding, but woof. Man. The I know the L5 is underneath it, and we've got a lot of volume underneath that inside swing, but that's a really, really, oh man, that's a tough spot. That's a really, really tough spot. I don't know. I don't know that I would want to take that. I can't. I'll wait. Yeah. Bitcoin 40K or 25K first, gun to head. 25K. I'm not feeling great about Bitcoin, I gotta say. I want to feel great about Bitcoin, but I'm not feeling great about Bitcoin. I really want to feel great about Bitcoin. We need something to fundamentally flip. I don't think the downside's done yet. As long as 20,000 is looming underneath it, I think we go to 20. But does the ES always high chance for a 2-to-1? Been trading MGC previously and decided to go for the MES due to the higher volume compared to the snail. Yeah, I'm surprised you call gold the snail. Gold's like the cheetah compared to the S&P sometimes. But as far as volume goes, yeah, totally different story. At least you don't have to deal with slippage as much, right? You can actually use market orders. Hey, as far as the S&P goes, let me back up. I only approach the market in one of two mindsets. And that's how and that's the lens that I look through. And after this, we'll switch over to the extended session because this might be a little bit of a longer question. But I always look through the lens from two different perspectives. Right? So this is the binoculars. Here we go, Picasso. So when I'm looking through this lens, I am either looking from a scalper's perspective or I am looking at a swing trader's perspective. I don't care about anything else outside of that because that's just not my shtick. That's not my forte. That's not my thing, right? It's not to say that a swing trade can't be, something like that, but let me further define these so we understand this more. What is a scalper? 0.5 to 1, right? You're making half of what you're willing to risk. High probability. So generally speaking, darts at a board, 66.6% of the time, because it's more fun that way, that you're going to just, again, no context involved, that it should be right due to the risk reward. Now over here, you're looking at it from the opposite perspective. You're looking at 2 to 1. I want to make twice as much as I'm willing to risk. The probability, therefore, then, on the other side of things, throwing darts at a board, 33.3%. Now, again, context will change where the darts land, obviously, but if you were to take those into account, you still equalize between 100%. So I'm still trying to gather the entirety of the picture, the whole picture, if you will. But I'm not looking at all the fuzzy stuff in between because it's easy to get lost in the details. So when I'm looking at a trade, the first thing that I'm looking at is, if I'm taking this trade, what am I? Am I a scalper or am I a swing trader? Well, that depends. Where does my stop have to go? Where's my, if my stop lands underneath XYZ swing, where does that put my target? That tells me what I am. And then it tells me what I have to go for. So everything is derived first from this lens. And then it's broken down from there. So is there always a high chance for a 2 to 1? No, there's never a high chance for a 2 to 1. That's not how probabilities work. Right? If anybody tells you that there's a high chance for a 2 to 1 without having high risk on the other side of that sentence, they're lying. That's just not how probabilities work. Welcome to math, right? Now, again, context, you can adjust these a little bit. You can modify these. And if you can scale in, scale out, you can modify it even further. There are definitely ways to modify the probability in your advantage. But by its default, there is no such thing as a high probability swing. It doesn't work that way. So that's how I break them down. Now, as an example, right? If I were to look at, let's look at that in action. Right, let's look at that in action. Actually, a perfect example is that L1 reconviction, that long from the chat room we were talking about earlier. This would be one of those examples where if I'm going to buy here, right, where am I going to put my stop? Well, my first inclination is if I'm going to be an L1 continuation, they shouldn't break underneath the bottom of L1. But if I'm putting my stop here, what's backing me up? Maybe the inside swing, the previous swing high, I guess. But there's nothing until way down here. My probability sucks. So if I'm taking this and my stop is going to be there, I have to be looking at 2-to-1, at least. Right? There's my lens. It told me everything I needed to know. There's the stop, there's the target. I know my probability is going to be bad, but I know given the context with an L1 reconviction, I've got a better probability. It's still low, but a better probability, the wind is in my sail, that the 2-to-1 will be successful. And if you can creep that probability in your advantage, even by 5%, that's all it takes. Long-term math, of course. Now, there will be times where we don't have a choice. We have to look at it from the perspective of a scalper. And you'll know because your stop and target will tell you. That's why I use those. Anyway, hopefully it answers the question. Let's jump into the extended session, and we'll get that going for you VIPs and members, and then yeah, we'll go from there. Don't forget, we're on our road to the 2,000 subscriber mark. So if you haven't subscribed yet, subscribe. Tell your friends to subscribe. Tell everybody to subscribe. We're trying to hit those goals because I got giveaways to do. I'm waiting for the next giveaway I want to do at the 1950 mark, because I figure if we do one every 25, that'll split it nice, right? So if we hit the 1950 subscriber mark, that'll be the next one, which I think is like, I don't know, 12 subscribers away. We're not very far away from that. And then we can do the next giveaway. So super excited. Get the ball rolling. Yeah. Anyway, enough self-promotion. Let's jump over to the extended session and get that going. I hope you all had a fantastic morning session. If I miss any questions, feel free to shoot me an email. I'll get those covered for you from there. Otherwise, for the rest of you, hang tight. And yeah, we'll see the rest of you all tomorrow morning, right? Enjoy. We'll talk to y'all later. Thanks.